The July data is out, and I like to think of it as kind of like a stalemate, a tug of war of sense. So what is happening is we just saw a 2% increase in the median home price. You would think with high interest rates we would not have this happen, but what's happening is there's just not enough inventory, and because of that, demand is still present. High interest rates are not necessarily slowing the market as much as we think they would. What's really coming to play is the traditional supply and demand. So let's take a look at the median home price graph. You'll notice that we had our peak in May back in 2021, and it went down, down, down. Interest rates went up, up, up. And what's happening? Well, supply is now low enough that we're seeing that uptick. So you'll see where it went up, up, up. It kind of flatlined in May and June. It was pretty much nothing happened. But July, guess what? We had a 2% increase. So it looks like the market's trying to recover to get to that. So next graph we'll look at is the number of closings. So we will see that overall we're just not where we want to be in the number of closings. So if you look historically, we have our normal peaks and seasons of the buying season. And COVID, obviously, from 2020 to 22, we noticed that those peaks didn't come back down. Although we had a dip, that's related to the interest rates. But guess what? The number of closings are still coming up there, but they're nowhere where they need to be. So less homes are selling. All right, next graph that I'd like to go over is the number of new listings. Well, no surprise, we're just not getting as many homes to hit the market. Why do you think that's happening? Well, I have to say it has everything to do with the fact that so many buyers are holding on to those low interest rates they got just a couple years ago. So there's no reason to sell if you have a 2 or 3 or 4% interest rate. What are you going to do? Move to a 7% interest rate? Not necessarily that easy of a decision to make. And although rates are not necessarily always going to stay where they are, we still have people staying put for these reasons. So we're just not going to get that inventory as we like. Same thing with availability. Let's go to that graph for just a moment. We just don't have that many homes available. Look how it peaked over the years. It's gone up and it's gone down. It's gone up and it's gone down. Well, that has everything to do with the buyer's or seller's market. So the graph is now down. It's as low as it is right now. What does that mean? We're in a seller's market. I am seeing listings go above list, even with the high interest rates, because more than one buyer is trying to buy that home. And that is creating the demand. When there's not enough inventory, we're going to see that. And let's go to one more graph. Let's look at the effective month availability. Right now we have 1.7 months of availability. We actually had a little bit of an increase availability, so that's actually good, but we're just not where we would like to be. I'd like to see a little bit higher numbers so that it's not as competitive, but again, supply and demand is going to dictate that. Well, if you have any questions about the real estate market and want to see these graphs, please tune in to my market update. I do this every single month. Subscribe to my channel if you'd like to get this notification when I send this out. Have a great day.